Yo, so one more time, we're gonna go over support resistance, supply and demand, and fibs. I'm gonna give you guys an opportunity to copy my fib settings. So with the fib settings, it's gonna help you out on like when you're drawing them. It's gonna give you a lot more clarity because the default fibs they work, but it's just they're not very clear and it bogs up your chart. Um, I think we're all on the same page, but you guys should be charting on TradingView. So I'm just going to share my screen. And then if you guys have any questions along the way, just let me know and I'll answer them. Can you guys see that? Just let me know if you guys can see my screen. E-Man, you see my screen?
Yeah, I see it. Did you? Oh wait, is everybody muted or?
Yeah, man. Like I think I muted somebody manually, but yeah, guys. Like if you want, like you can ask your question or just ask it in the chat. Like I don't really care. It doesn't matter. But basically, simply put, support resistance is like a basic technical analysis you can do. It's an oversimplification. Okay, you really want to stay away from oversimplifications in trading, just because they're really dangerous when it comes to entries. You know, somebody just running standard support resistance would say, "Oh, we have some resistance right here." Okay, I'm just gonna make them really thick, and we have some support. Let's just say here, okay? And all support and resistance means is resistance to break through, okay? So basically it's like a ceiling. You see candles hit and it rejects. The support's down here. So then, you know, it stays on top of the support like a floor. It's a ceiling, it's a ceiling. Here it breaks, right? And then here it's supported again. The whole theory with support resistance is that just you're gonna just trade when it breaks out. You know, again, this is coming back to market structure. And if you, I'm not going to do a whole nother deep dive on market structure because I've already posted it on YouTube. That's like, I think one of the first calls. But basically, support and resistance helps look for a break of structure. Just because if this is like a previous high or a lower high, right? If it breaks above, then you can see that it's a break of structure. But you can see GBP AUD, this is on the daily. It hasn't broken above this level. But if it were to do, say, something like this, let me thicken this up a little bit. If we're to break through, right, then we'd have a breakage structure. Okay, and if it retested, then we'd have, you know, a confirmation. I'm going to go through the positives of support resistance, then the negatives. The positives is that you can see it works, okay? Generally, you can see works, but one of the negatives is that it's not with a whole high degree of accuracy. So you can see here that the candlesticks kind of peek through, and your average trader or your novice trader is going to take a buy position here and get absolutely obliterated the next day. Their stop loss is going to be around here. They do a deep stop loss, and that's going to go right to their stop loss. And this is what's going to kill just your normal traders, just because you're not looking at the candlestick patterns, and you know there might be some economical events going on as well, some fundamental analysis required there. That's why, you know, as much as supply and demand, or sorry, support resistance is applicable, I typically don't just trade just off of it. I'll trade off of a trend. You know, there's another way we can analyze this, just doing our trend lines. You know, this is me going back super basic. Let's just say here, okay. 1, 2 future. So this is a bit of, let me lower the time frame here. Go on the H4. So there's a bit more candlestick movement here. It's gonna help with this trend line. Okay. This isn't great. I'm cutting out that wick, which sometimes I do just for pairs that wick a lot. What was I going to say? Oh, yeah, sometimes I don't go off support resistance. I go just based off of fibs. So rather than trying to look for a break of structure, like I'll see where the trend's going. So I know that this is going down. So you can see that this was virtually a double top. It was 100% a retrace, right? So if I were to run my fibs from top to bottom, okay, you don't really need a tool for this because you can see it goes to the exact same level, but just for visual here, right? It goes to the same level and then it retraces, right? That's a bit of a large retracement, but see what I would typically trade on. You see how it sells off, then there's a retracement, then there's that huge sell push. Like you can do it off either here. You know, either would have worked. So let's just go based off of this, right? This is only 23.6%. I wouldn't have entered off that. But, you know, let's just say from here, top to bottom, nothing really grabs my attention either. Because you got to be realistic when you're entering off this. This market structure right here is kind of wonky, I'll be completely honest, because this is almost like a teacup pattern. But yeah, I probably picked the worst chart for fib examples. Let me get a better chart. I always pick the worst charts for you guys. Try to explain stuff. I'm like, here, look at this chart that it does not make sense on whatsoever. Let me clear. Okay. Easy. Okay, Euro USD. You guys probably all trade it, right? Just run my fibs, nothing crazy. And this is just quick and dirty, so the accuracy of this can be off, okay? My whole point is if I see the market moving downwards, I'll take the fibs, run it on a move, and see where it retraces. You can see, oh, it hit my 71 or 61 range, and it sold off. But this is an oversimplification, and this isn't even a move that I would use fibs for. Like these two candles right here, this strong sell-off, this was on the, I think it was off the Brexit news or the G10 news. But you can see that, yeah, right there, boom, okay? Let me go on the hour one. This is a Matt type of trade. So if you're like, yo, how does Matt trade? This is basically it. You see a huge sell-off. So impulse move, very, very quick, okay? Because the quicker the move, the quicker the sell-off. And then, you know, 61.8 retrace, sometimes 71, and sell. And you see this quick movement right here. That's quick 20 pips. It's usually a lot more. It'll usually drop till around here. But since this was a fundamental push and not a technical push, you can see that it didn't sell off quite too much, okay? It probably will sell off even more because it's respecting that, but that's pretty much it. Okay, I'm gonna give you guys a second if you guys want to use my fib settings. I'm gonna go into settings. So if you want screenshot this, oh shit, hold on. If you guys want screenshot this so you can use it, the colors don't matter. I just like my entering levels to be golden. So 38.2 is like a very, very quick retrace. So it'll hit it and kind of sell off, or quick buy push. The 61.8 percent retrace is more of a slower retrace. So, you know, pick your poison. I typically try to go 38.2, and that's how I kind of lay it out. But there's that. So there's the fib portion. Okay, so we went over support resistance. We went over fibs. I know I'm kind of going through it quick, but when I put those kind of three concepts together, you guys will get it, okay? I had to go through support resistance to get to supply and demand. So okay, let's go here. This is perfect. Okay, so supply and demand and support resistance follows the same concept, but just different execution. Okay, it's very improbable and unlikely that the price of a forex pair will reverse at the exact same price. So you can see here, candle, candle, it reversed here. But in this circumstance, it reversed here, okay? So you can create a zone that helps you identify this. So you look at a strong reversal. So imagine that this isn't here, okay? So imagine that's not there. So all we have to go off is this, and I'm going to zoom in. So to draw my demand zone, so demand is at the bottom, so like your support, and your supply is like your resistance. What I would do is I'd take my rectangle tool, I would go from the candle, the bottom of the candlestick, so I'm looking right here, off the buy push, off the buy movement, okay, to the breakout candle body. So I would go to here, because here, like, that's a thick zone, like that's not going to tell you a whole lot. But here, that's going to really help me. Okay, as we can see, let's say we shift further in the week, I can tell it didn't quite reach that, right? What I would do is I'd run my fibs from bottom to top, okay, and see, okay, I see a lot of movement from the 71 level to the end of the wick. So you see these two wicks right here, right? And even there. So I'd recreate a zone that's between a supply zone, or sorry, a demand zone and the bodies. So just like that, and I draw that across. And once I delete this stuff, like it'll make more sense. So the fibs are more of a tool to help you create your zones, because the fibs really clutter the chart. Makes it hard to look at whatever you're looking at, okay? So let's say it was this day when I was creating my zone. So again, this is on the daily. This strategy works very well on the hour 4 because there's more wick movement. But you can see here again, it respected it again. But again, there's these inaccuracies, okay? So when you're drawing these zones, it's very important. We got a question. Getting a bit lost with so many rectangles. Yeah, I'm going to redo it on another pair because this one is doing a whole lot. Let's go. E-Man, what's a pair you want to look at?
Let's take a look at Euro NZD.
Man, I don't think I've ever looked at that. You trade that?
I do. I trade every single pair, my guy.
Okay, this is clean. This is clean.
Yep.
Okay. Well, I don't know what this is. Okay, cool. Cool. Okay, yeah, you guys are getting confused because there's so many rectangles, okay? Because the reason, okay, guys, like it's super easy. All these Forex people would be like, oh yeah, just draw a rectangle here and you'd be in the money, okay? I'm trying to show you the perspective as if I didn't see what was going on with the market, okay? So that's why I'm drawing this one here. So I can make it fully black so it doesn't confuse you. I know there's a way to cover the charts, but listen. So imagine what's in the black I don't see yet. Make sense?
Yo, Matt, sorry to
Yeah.
interrupt you.
Yeah.
If you click on, there's those two back arrows right next to your clock at the top. Click that, replay, and then select your area where you want to cut the time out. Makes things so easier.
Oh man, I just stick to what I know, man. This is a lot clearer for me too, because we can see after, right? We can kind of extrapolate it right away. Thanks, E-Man, but sometimes, bro, just stick to what's easy.
Yeah.
Because if I'm confused on drawing it, these guys are like, oh, Matt, I don't get it. I'm like, yeah, I don't get it either. I don't know what I'm doing. Okay, so let's say I'm trading Euro NZD as E-Man would. Okay. Let's say I'm whatever trading, whatever. I don't really do an analysis. When I look at the market, we are right here at the top. Okay. So when I'm drawing my rectangular zone, I'm going to go off the bottom of the wick. Okay, let me zoom in so you guys can see. Okay, so the bottom of the wick to the breakout candle body. Okay, so in this case, the breakout candle body is very thick. So sometimes if it's just a long wick and the body is really big, I'll just do the wicks. Okay, so I have it more accurate. So then what I do, it's gonna go from the bottom here to there. I like to do it off to the left so I can do it more accurately. And I do it across. Okay. Let me change the color here. Okay, so I have one zone created. I can do the same thing for right here because we had a retrace and it broke out. Okay, right here at the top, I can do just the wicks if I want it to be more accurate. And this is pair dependent, guys. You can see that when I create this zone, it doesn't really respect it. So is that a good zone? No. Okay, so sometimes it's knowing where to make the zone. This is just a retrace. Doing it here can work sometimes, but not always. But if you can see that it's basically a trend reversal here, that's a very strong zone to draw. Are you guys following along? Or am I just blabbering on? You guys are like, what's Matt talking about? I don't want to confuse you guys. That's why like I'm recording this so you can watch through it a few times. Because like, trust me, this stuff never made sense for me in the first like 5-10 times. But as I went on, I was like, oh, okay, that started to make sense. So I drew my zone here, okay? And then between my zones, what am I gonna do? I'm gonna run fibs and such, right? So I'm gonna see, where's the trend going? Well, it was going down here, right? If I drew a trend line. So I don't always draw the trend lines, right? But like sometimes I just see it, but for your guys' sake, I'll draw it. So I can see what happened here. Respect to the trend line, and then what happened here? Oops, right? We have break, retrace, and buy, right? So then we have our break of structure right here. Because it hit that high right here, which is a higher high, higher low, and it went lower, and now we have another higher high. So right now, we just went from a downtrend to an uptrend on the hour 4, obviously. This is time frame dependent, right? Let me see what's Forex Master Matthias. I tried, bro. Yeah, Albert, bro. Remember Albert, bro? Me and Albert are sitting in class one day. Albert's like, yo, I'm getting gold signals from this guy. I'm like, yeah, you should probably sell it right now. And then like, I was already up 5 pips. And then Albert's like, yo, I just got a signal to sell it. So sometimes knowing what you're doing helps you out profitability wise, you know? But can't rag on Albert. Albert's an OG. But this is like just the basics of my strategy. Okay. So like supply and demand, fibs. Okay. And then I'll layer it with, I like the ADR now, bro. E-man. The ADR, it really helps, yo. When it starts to sell off one day, it can usually hit the ADR range almost every single day.
Really?
Yeah, bro, it's dangerous because it takes an average for that day, I think, across
The
years.
average, is that called the average daily range?
Yeah.
That's very, very, very crazy.
Visually, because for profit targets, even like, okay,
You
let's.
can set up your fucking targets easily.
Yeah, and you're gonna hit it within the
That's
day. Like, look,
insane.
okay, because where this green line is, that's one day. So
Right.
the day started here, went from the
Yeah.
low to the high, and it even broke it.
Yeah.
And then some days,
Usual retests and breakouts of the previous daily structure.
and then some days I've noticed too. Look, okay, this one extended past the range, right?
Yep.
So that tells me it's overbought.
Yeah.
Right. So like, yeah, you have the RSI, yeah, you have all this stuff, but if you just go on daily volumes and see that it's like overbought on average, then you usually see a retrace. And like as you see here.
Yeah.
Like you can see here. Oh, it was overbought, retrace. New day started. It's strong buy push, right? It's probably gonna go to here. Because you see how strong this trend is. Like let me turn on my this indicator, whatever it's called. people on YouTube are gonna be like, bro, this guy doesn't know what the fuck he's talking about. Yeah, ADX. So you can see that's still a strong buy trend, right?
That red line is what's it called? That point where it's like extremely overbought, right?
So that red line is basically it's a threshold. Okay, think of
Got
it
it.
like it's like a volume based threshold. When the closer you get to the
Oh,
threshold, the more you can expect a reversal. So like let's go through
right.
examples. And
I can see that.
this is pair
Yeah.
dependent too. Like yo, when we get to the peak, what happens? It's sold off, yeah, but that wasn't a huge sell off, bro. So
Mhm.
I find ADX is really good on the daily. And when there's not much you know going on the ADX, because this value on the side basically dictates how strong the trend is. And typically, if the trend's not strong, it's not ideal to trade. And you can see it even influxes sometimes, so it goes backwards. And like sometimes you can catch good entries, but it could go either way. When it's you see how it goes like upside down. I forget what that's called, but it goes the opposite way. So sometimes I notice when it goes inverted, it's like consolidation essentially.
Okay.
And
Interesting.
then when it shoots up, so when it's very jagged, you're gonna see like that's like a strong push, and typically there's a sell off after, or sell off or like a buy trend. So like this red or downtrend, it was a strong downtrend, right? You see how it peaked,
Hmm.
and you can tell by how sharp the lines are, and then it shot up, right?
Hmm.
But then it can still go to a buy trend. But then it's not like a full reversal yet. If it's going down, if the trend strength's going down, right? But it changes colors. So you see this part.
Yeah.
So there's still
That shift.
there's buying volume, right? But it's not
Right.
shifting to a buyer's trend. So that's why this is still going down.
Yeah.
I remember we stumbled upon this indicator, and like I've been watching it. It's been helping a lot. And then you can see like obviously some days like it's just a monstrosity. I don't know what happened here,
Yeah.
but yeah, 200. It's wild. Um, but yeah, the average daily range, bro, that's like these two, the ADX, because I've used a standard ADX without without the bars.
Right.
And it didn't help me that much. But this, the way it's visually styled, really helps me. I'm a really visual person. So it's called
That
trend
yeah.
strength ADX LW.
That honestly reminds me of MACD.
It's fairly similar to MACD. I just don't like MACD because you have too many lines. Okay, so MACD you'll have contact your IT team. Okay, whatever. MACD you'll have the volumes and you'll have the lines. Sometimes it's hard to read depending on what colors you have it.
Mm.
And when you have indicators with lines, I find that like sometimes a line be doing one of these like right.
Yeah.
If you know what I mean. So like sometimes you just don't even know what to do
I don't even
until it
like
closes.
for me, like I just rather look at the momentum
Yes.
in the
Yeah.
MACD and just call it a day. If it's a crossover, okay, I'll maybe take that into consideration. Um, but yeah, that's basically what I try to get at. Look at the momentum on the market and just
Yeah.
literally follow the wave, and
So
that's it.
guys, we can see it's a buy trend for Euro NZD, right? We can see it's overall was a downtrend, now it just changed to an uptrend, right? So you guys can see that. Like, I don't want to have a bajillion trend lines and just be like, this be like some laser show, but you know what I mean? So what I would do if I was analyzing this is I would delete this and just have this, right? Makes it a lot more clear. I honestly wouldn't put the line because I can see that, but just for again our sake, I'll put that. And you can see it's reaching the threshold of this trend line, right? And what? Oh, it's reaching 100 on our trend strength indicator or average directional index, right? Or trend strength, whatever. And you can see at around 110, it just tops out when it's a sharp angle. So that could be a sell indicator, right? And you can see that the past 4 hours, there's been a huge surge, right? And E-man, does Euro NZD wick a lot? Yeah, it seems like it does.
It tends to, due to the inconsistency of NCT.
This is probably gonna wick out. If I was gonna trade this right now, I've got 8 minutes to show a position. What would I do? Okay. Let me get the fibs going. So this is a whole lot of stuff going on. This is why I toggle on and off my indicators. And I don't like to keep the fibs on there, right? So then I'm going to use fibs to help with my exit. No. Okay, whatever. I'll just draw a line and drag it to the line. So we can see 61. 61 is usually the best retrace, but then you can see 38.2. There's a level of resistance here. So my TP1 would be here. My TP2 would be somewhere around here. If I was doing 2 TPs, I typically do one. Previous levels, I would do a small stop because if this keeps going, it'll blow right to your stop loss. Why can't I move this? Is this locked? Oh yeah, funny me. Typically, if it blows past your trend line, then you don't really want that to happen. So I'll do it off this previous, level there. Yeah, I do it like this. We'll see how this plays out. So I'd have like, if I was doing like a larger position trade, so like full lots, I would do there. If I was doing a half lot trade, then I do it here. If you're a patient person like me, what I would do is, I play chess, not checkers, right? I always say that in the chat. Why? Because I'm not impatient. What I would do is I'd wait for the retrace to hit 38.2 level, and I'd go in for the buy. So there's, and you can put your stop loss there. And this can be a lot higher profit potential, right? Just going off the trend lines. But then again, the bottom, right? Where is this going to bottom out? It's probably going to retrace quite a bit because it's a strong buy push. So you have a strong buy push, you have a sell off, right? So depending on what happens, I want to see more favorable for the sell off, in all honesty. Does this make sense, guys? I want to get into entry. So if I was going to enter the market, then I just sell it. And this is a 3-to-1 trade, and the profit potential, like, if I was E-man, so E-man, I don't know if I got your juices flowing off this trade, but like
you did actually. I would have pulled that.
Take profit is going to be here, okay? And E-man's going to use like a 0.01, so he's going to have a stop loss up here, right? So you can get creative with it. Yeah, right. So then it's all about your style. So I'm like, yo, I'm trying to be in and out. So then what do? I raise my lots, put my stop loss here. Matt's impatient, right? So Matt puts his
super tight stop loss.
Boom. Like, or even a little bit deeper, right?
Like that.
I want to get my money and get out, okay? But E-man, E-man's patient. Matt, you gotta know yourself, okay? E-man's, he's got that patience, He's probably gonna put a stop loss lower, but like something like that.
Yeah, like my stop loss would literally be at the point here where it's. Give me a second.
Previous high.
80.50.
Missed why you put the rectangle in that exact spot. Where here? Man, I went over it twice. You got to go through the recording because we have 4 minutes left. So I'm just going to close this out. Respectfully, I'll go through it again. But if you still have questions after watching this video again, then just like reach out to me. If anything, I'll go over it one more time on another call. Because again, this is very jam-packed. But this rectangle will only start to make sense once you like practice it more. I can just see them. Sometimes I don't draw them. I don't really draw this, okay? I don't really draw this. What do I do when I look at a chart? I do literally. Okay, I know what's going on, okay? That's just the fibs. The fibs hard to visualize. Sometimes I'm like, yeah, that's probably 38.2. You start to see things once you, yeah, supply, demand. Yeah, so you're gonna go, okay, 3 minutes. I'm gonna go rush through it one more time. Okay, so if I'm drawing it, imagine I don't see this other stuff right here. I'm going to go from the candle. I usually just do the candlesticks at the tip right there and draw it across. And then in future, if it returns to that level, depending if it breaks it, it's going to help me with my market movement and my execution for my trades, right? But you can see, was this a clean break? No, or not really. Someone could have got faked out on this even. So that's why, like, as much as it's good trading the breakout, like, I usually don't. Because, like, I probably would have sold it here if I was trying to trade the breakout. No, but this is a strong move. Yeah, I wouldn't have sold it. Or maybe I would have waited for the retrace. That's why, like, guys, like, I just go on trend continuation. And then when it gets to these levels, like, I try to cool off until it breaks to, like, here and then retraces. Like, I need a clean retrace, like a thick one. Because if it's just this, like, you can get a fake break and then that's when you lose money. But if it's like this and then like this, your boy Matt's selling that. If it's a 38.2, if it goes down like this, it's my 38.2, then I'll sell it. But otherwise, ain't it's not as probable, right? Like I was saying yesterday, guys, you want to go off probability. What's the most probable outcome to happen, right? Most probable outcome to happen after a strong buy push is a sell-off, right? Depending on how large it is depending on the market, right? But it is an uptrend, yeah, but it's a smarter entry. If you want to enter, I got a minute 30. This Zoom timeline always gets me. What's going on here? If I want to draw a trend line here, right? So maybe I want to start buying it somewhere around here if I was going for the buy. But to sell, maybe I can sell all the way down there. It really depends, right? And again, guys, you want to be intimately familiar with the pair you're trading. So like Eman's like, yeah, I trade that. So then when I did that trade, Eman's like, yeah, I can see the probability on that, right? You won't really get to that level until like you start trading a pair. So guys, trade like one pair and just stick to it. Or if you're completely brand new, trade as many pairs as you can and see which you're most profitable with. And see which one you're like, oh, I see this happening. Oh, I see that happening. And the more that starts to happen, then that's when you're in your zone. But then like Eman's like the next level, right? There's levels to this stuff. So Eman trades on a bunch of, charts because he gets this, you know what I mean? So that's all for tonight, guys. Any questions, anything, just reach out to me in the chat. If you're watching this on YouTube, we have a group chat. It'll be in the description. And yeah, guys, have a good night. Peace.